This is the Financial News Network. I'm Christy Duffy. JP Chase reported third quarter earnings. The company said profit rose by 23%, but revenue and loan balances were weak. The bank posted $4.4 billion in net income, or $1.01 per share. Revenue was $24.3 billion. Investors and analysts saw the performance as tepid, which is troubling, as the firm is considered one of the best managed in the world. With me to discuss what's next is Dick Bove of Rochdale Securities. Dick, a recent Barron's piece suggested JPM may be looking to expand. Do you see the company positioning itself to make any acquisitions in the near future?
Well, the law in the United States prevents them from buying a regional bank in this country because JP Morgan, like Bank of America and Wells Fargo, has more than 10% of the deposits of the nation, and by law they're not allowed to make acquisitions which would increase that deposit percentage. They can, however, make acquisitions overseas, and they can make acquisitions in the capital markets arena, and I expect them to do both.
And what is JPM's exposure to the foreclosure robo-signers debacle?
I think their exposure is just about as big as Bank of America's, because JP Morgan acquired Bear Stearns, which had a bigger, if you will, mortgage exposure than Merrill Lynch, and JP Morgan acquired Washington Mutual, which was pretty much the same size as Countrywide. So I think JP Morgan is into this situation just as deeply as Bank of America is.
Year to date, the stock is down by 4%. Do you maintain your buy rating and $48 price target?
Well, the reason why I've got a buy recommendation on JP Morgan is because I believe that it's actually one of the best managed banks, or one of the best managed companies in the country, and that the United States needs banking services. And if the United States needs banking services, then these big banks are going to be providing those services, and their balance sheets right now tend to be in relatively strong condition. My price target near term would be something in the 40s area, but by the time the cycle is over, I would expect that stock to have doubled.
Okay, where do you see normalized earnings for JPM in the fourth quarter? Will lower trading and banking revenue impact that materially?
Well, I think that their earnings in the fourth quarter will be somewhat less than they were in the third quarter, because I think that in the third quarter they reduced their reserves, they cut their tax rate, they bought back shares, they expanded their balance sheet. They did a number of things which I don't think are more than one-time events, and therefore I don't think the bank can earn as much in the fourth quarter as they earned in the third.
Will lower long-term rates due to QE2 impact lending margins?
Well, low long-term rates hurt, right, because they reduce the spread between the bank's cost of money and what it can sell its loans at, and therefore by reducing the spread it reduces the net interest margin of the bank, and it hurts earnings. QE2, should it occur, basically will create more money that will be spread into the economy. And if JP Morgan makes the decision to lend that money, then it will help the company's earnings, but I don't think they'll make that decision. I think that their capital ratios are so high that they won't be able to lend the money, and therefore I don't think QE2 will have any impact on the company at all.
All right, thank you, Dick. For further updates, make sure to subscribe to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.